Okay, so we are now 7 full days into the month of January here, 2021. And you might be thinking to yourself, I've made it 7 days so far through this year and I'm not liking it that much so far. You might have even seen this meme passing around on social media about how you just want to cancel your subscription to 2021 based on your 7-day free trial. But the truth of the matter is we always need to be investing for our futures. Even when times are uncertain, even when the unprecedented types of things happen around the world, especially maybe even on our capital, we're still investing for our future. So in that spirit, I'd like to share with you 5 different dividend stocks that you can add to your dividend portfolio like right now. And I'll give you all the information you need to know, from the current dividend yield, looking at the dividend payout ratio based on free cash flow, looking at that dividend growth rate, looking at how the business has weathered the COVID crisis, and everything in between. You know, at this point I could go into this long and drawn out monologue where I encourage you and really implore you to smash the like button, or maybe I would do a magic trick for you here on the screen with money. But alas, I'm not capable of doing either of those things. Let's go ahead and start the video. What's up, you guys? Welcome back to the Average Joe on Money Financial channel, where we talk all things personal finance that affect people like you and me, the average Joe, definitely with an emphasis on investing and dividend stocks. So in this video here, I want to jump right to the content. We're going to talk about 5 different dividend stocks right now here in January 2021 that offer a great starting yield, which can actually be a very difficult thing to find right now. If you're looking for strong companies that have a really strong history of paying dividends, a lot of them have a dividend yield right now that's just not very meaningful, which wouldn't be that big of a deal if you had a really great dividend growth rate, but alas, most of them don't have one of those either. So the 5 dividend stocks I'm going to share with you each have a great starting yield that is going to be meaningful, and they will have a dividend growth rate that beats the historical inflation rate. 3 of these dividend stocks here do not have a significant dividend history, meaning they have at least 5 years but less than 10. And then 2 of the ones I'm going to end up with here are ones that are dividend champions, meaning they've been paying dividends for at least 25 consecutive years. Just so you know, the January 2021 dividend stock spreadsheet that I update every single month for members of my Patreon community is live as of this morning. So if you're a member of the Patreon community, well then go get your spreadsheet. But if you're not yet, for as low as $5 a month here, you can join up with my Patreon community, support me in helping create more content, but most importantly, you get stuff that you want, which is that monthly dividend spreadsheet, which is a monthly dividend spreadsheet that covers all the dividend stocks out there that have been raising their dividends for at least 5 consecutive years, with a lot of extra content in there regarding their dividend payout ratio based on free cash flow. So lots of good information there. If you're interested, click on the link in the description below. Okay, so the first dividend stock we're going to talk about is one that I've mentioned before on this channel, and it's also one that's currently in my dividend stock portfolio, and that is Westlake Chemical Partners. Ticker symbol here is WLKP. It's in the materials sector. It's actually an arm of the Westlake Chemical Corporation. And Westlake Chemical is just a cash flow king. They just continue to pump out cash flow every single month and every single year. Now, they don't pay a monthly dividend, they pay a quarterly dividend. But the point here is, this is a master limited partnership, meaning it's got special tax benefits, both for the company that created the partnership, as well as for the partners in the company. That's like you and me. So with a master limited partnership, a lot of the dividends are actually known as distributions, and instead of being taxable when you get them, for the most part, again, check with your tax advisor, most of these distributions, instead of being taxable now, that distribution would instead lower your tax basis, meaning that when you sell the stock one day, the amount you paid for it would actually be lower, and you would instead pay a larger capital gains tax when you sell the stock. So as you can see here, Westlake Chemical has been paying dividends for 7 consecutive years. That's known as a challenger. That means they've been paying at least 5 years, but less than 10. Let's talk about the payout ratio based on free cash flow. Now, the dividend payout ratio is a measure for investors to understand how much of their actual cash that's available, how much is being used towards the dividend. Now, the standard measure for this has always been net income, which is not a good representation of actual cash coming into the business. There's lots of paper expenses that don't actually make their way into actual cash. So you can potentially artificially change or inflate or deflate, if you need to, the outlook of the company while not actually changing the cash flow. So we like to do here on the Average Joe on Money Financial Channel, we like to talk about dividend payout ratios based on free cash flow. So in this case here, based on last fiscal year, which was December of 2019, a little bit old, the payout ratio was only 15%. But instead, we can actually go look at the most recent few quarters to see what the current free cash flow is for the company and then see how much their dividends are paid as well. Let's go ahead and jump to Morningstar's website. In order to get to the most recent quarterly data, we need to go over here to financials, and then we need to come down here to cash flow. Okay, so we're gonna go to the cash flow statement. And then from here, you have to make a few modifications. We need to come up here and switch it to quarterly. We need to stretch out this text here so we can know what we're looking at, otherwise it's pretty difficult. And we need to scroll over to the most recent quarterly data available. So what we're looking for is the number that's going to get us to free cash flow. It's not clearly itemized here on the cash flow statement. We have to come down here. We're going to scroll down and look for total cash from operating activities, indirect. Here we go. Total cash flow from operating activities indirect. So we can see here, and this is in millions. So we've got Q1, Q2, and Q3 here. 110 million, 112 million, 117 million. Q1, Q2, and Q3. No adjustments there for COVID, as you can see. COVID really didn't have an impact on this business. Let's go down a little bit further here. So you're going to take this number here and subtract out the purchases of property, plant, and equipment. That would be money used to invest back into the business and grow the business as well as maintain their assets. So we're going to take those numbers away. We'll call this about 100 million, and again about 100 million here and here. So then we come down and see how much of that money is used to pay the dividend. So we scroll over here, scroll all the way down, and we go to dividends, 16.35 million. So what we're talking about here is every quarter, they're generating in free cash flow about $100 million. And they're only using 16 million to pay the dividend. That tells me two big things. Number one, that their dividends are stable, and number two, that they can grow that dividend continually in the future. Current price on this partnership is $22.49 a share. That's as of end of business January 7th. Annual dividend $1.89, and you can see here the growth rate. 1-year growth rate is 4.7%, 3-year growth rate 9.4%, 5-year growth rate 10.4%. And let's take a look here at the dividend growth rates, because it's an important measure that we need to be aware of as a dividend investor. We've got 4.7% for the 1-year growth rate, 3-year dividend growth rate is 9.4%, and 5-year dividend growth rate is 10.4%. So this company, despite COVID, despite the fact that the stock market has been running up here, this company is all about every single quarter of every single year paying a dividend, a large dividend at that, because you can see here the current yield is 8.38%. Great starting yield here. It's because it's a master limited partnership. Even though they're allowed to pass through up to 100% of their net income, they're only, from a payout ratio perspective, only putting out 15%. I'm looking for this dividend to grow in the future and be a very stable payout for my portfolio. Okay, so next here on the list here, dividend stock number 2 is Star Group Unit, ticker symbol SGU. They're in the utility sector of the economy. If we pop over to their website, we can see what they do. They're all about they're a full-service energy provider specializing in the sale of home heating and air conditioning products and services to residential and commercial customers. Things that people need no matter what's going on in the economy, right? So we can see here that this company's been paying dividends consecutively for 8 years. They're a dividend challenger, and based on their most recent fiscal year, which incorporates the majority of the COVID impact all the way through September of 2020, their payout ratio based on free cash flow is only 14%, very similar to Westlake Chemical Partners. So that tells me, like I said, two important things. Number one, that the dividend is stable and in no way should it be cut anytime soon. And secondly, there's a lot of room for that dividend to grow. Current price per share for this utility stock is $9.42 a share as of January 7th. We've got a current yield here of 5.63%. That's a great starting yield, and their dividend growth rate, as you can see here, is 6.1, 6.5, 7.0, and 6.1 for the 1, 3, 5, and 10-year growth rates. Again, that tells you that this is a company that can continually raise their dividend. They have a history of doing it, and it's a meaningful increase every single year that outpaces inflation. So SGU is not currently in my portfolio, but it's going to be in my portfolio very soon. I made mention recently that I'm in the process of reformulating and adjusting my portfolio with Fidelity, my dividend portfolio, and I'm trimming back my holdings from about 35, 36 to around 20 to 24. So SGU, spoiler alert, is gonna make the cut. I like this dividend stock here. I like diversifying into this sector of the economy. It's a great buy here in January of 2021. All right, dividend stock number 3 here is AbbVie, and I feel like I can't make a dividend stock video these days without talking about AbbVie. Ticker symbol here, ABBV. They're a player right now when it comes to COVID-19, but they also are a massive biopharmaceutical company that offers a lot of great solutions for Americans. And so we can see here they're in the healthcare sector of the economy, 9 consecutive years of dividend growth, though I can tell you that they were actually split off from Abbott Laboratories back in 2013, 2012, 2013. So that number is not truly a 9, it's actually more like a 50 or 55 years, but because the company itself has only been in existence for 9 years, that is what we're working with here. Dividend challenger. Their last fiscal year end was December of 2019, and at that time their payout ratio was only 49%. That's great. That's a really old number, and with COVID-19 happening right now, we really need to make sure we understand how businesses out there that we invested are being affected by COVID-19. So we need to jump on our Morningstar's website and do the same thing here where we check the most recent quarterly data to see how the business is performing. Okay, so we're here on the cash flow statement. Let's take a look here for AbbVie. We're gonna come down here, we're gonna look for total cash from operating activities. Let's come on down right here. Total cash flow from operating activities, indirect. We've got here for the most 3 recent quarters here, Q1, Q2, Q3 2020 at 3.8 billion, 3.09 billion, 5.83 billion. We get rid of the purchase of property, plant, and equipment, which is negligible here for all 3 of the quarters. We'll just call them the same numbers, 3.8, 3.1, and 5.8 billion dollars in free cash flow. We come down here, we're going to look at the dividends being paid out here. We've got only 1.76, 1.75, and 2.1. So we can see that there is plenty of cash being generated each and every quarter despite COVID-19 to pay the dividend right now, but also to pay it into the future as well. We're still sitting around 50, maybe 55% despite COVID-19 happening on the dividend payout ratio. So coming back over here to the spreadsheet, we've got, again, a price right now, $106.69, and based off of that price, January 7th, 2021, we are dealing with a current yield of 4.87%. And if you look here, it's got a great dividend growth rate. 1-year growth rate is 10.3%, the 3-year growth rate 22.6%, and the 5-year growth rate 18.5%. So AbbVie is currently in my dividend stock portfolio. It is going to stay in my portfolio, and I'm going to continually add more shares as well. All right, 4th dividend stock here on the list here is Walgreens Boots Alliance, ticker symbol WBA. This is a company that's in my dividend stock portfolio. It's going to stay there, and I'm going to keep adding shares because it's a dividend champion. It's been raising dividends for at least 25 consecutive years, but the true story here is that it's actually 45 consecutive years. Their most recent fiscal year ended in August of 2020, and at that time, their payout ratio was only 38% based off of free cash flow, which is great for a company dealing with COVID, and Walgreens is a very stable business. You know, people are still going to walk into a Walgreens, whether it's to buy healthcare related items or for their pharmacy or potentially just for other random things. They're going to keep walking into Walgreens. Current price here as of January 7th is $45.26. The current yield based on that price and their annual dividend of $187 is 4.13%. So still a dividend champion yielding over 4% with an acceptable dividend payout ratio and growing their dividend by at least the rate of inflation. What more can you ask for? 1-year growth rate here is 3.1%, 3-year growth rate is 6.1%, 5-year growth rate 5.8%, and then their 10-year growth rate is 11.5%. So Walgreens Boots Alliance during these times of uncertainty is a great stock to own in your portfolio and gives you stability. Okay, last dividend stock here on the list is UGI Corporation. Their ticker symbol UGI, it makes it easy. It's in the utility sector of the business. They've been raising their dividend consecutively for 33 years. That makes them a dividend champion, and they're a great, stable dividend stock to have in your portfolio. The most recent fiscal year ended September of 2020, and their payout ratio was only 60%. Let me remind you that this is a utility company, which means they have a very stable business model. I love the fact that they are able to pay out a really great dividend at 3.77%, and that their payout ratio is only 60%, because that tells me there's room to grow it in the future based on current revenue amounts. So UGI, as of January 7th, has a price per share of $35.05, and based on that, their current yield 3.77%. Not an epically strong yield, but it's a great starting yield to have right now. We've got a 1-year growth rate of 14.4%, 3-year growth rate 10.3%, the 5-year growth rate is 8.1%, and that's also the 10-year growth rate as well. And UGI Corporation is in my dividend stock portfolio as well. As a reminder, you guys can click on the link in the description below to jump over to my Patreon community and get access to this monthly dividend spreadsheet every month as a starting point to building a dividend portfolio for your future. Make sure to leave your 2 cents in the comments below. Do you own any of these dividend stocks? If yes, let me know which ones you own, and let me know which ones you think I left off the list and why. Make sure to leave your 2 cents in the comments below. And that's all I got for you guys. Have a great rest of your day, and please continue to stay healthy both physically and financially. Have a good one.